Well, hello folks, I'm LA Little and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday. It's broadcast here at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. Also do a weekly show. And if you haven't subscribed, you might want to. Just reach up there, hit the subscribe button. Anytime we push content, you'll be notified. As far as what did happen today, it was a very bad day. And if you caught the show last night, and actually if you've been watching the show for any length of time, you've heard me talk about more and more about the danger that existed in this market and how that danger was front and center, it was present. And today, it all culminated in a big draft to the downside. The S&P goes negative on the year. You got it, 358 points on the Dow today, 141 on the composite. Swing point lows broken all over the place. Range trade on the S&P breaks on and on and on. We can talk about it all. All you need to know is that the breakdown is underway, and the question is does it continue? Is it a false break? Is it going to bounce? Right? I mean, that's what everybody always wants to look at. So we'll try to tackle those questions as we go along. We talked about gold last night. Big spike up today on it. 18, almost 19 bucks. Silver up, bonds up. All the things you would expect. So you go running to the things that have been nobody wanted, and you get out of everything that everybody wanted. And so it's a rush for the door with a size about the keyhole to get out of. So let's look at the actual charts. So if we start here with the S&P 500, right? We've been looking at this market and saying, hey, if this thing starts breaking out these lows, it's going to be a problem. And today, the downdraft was not only a breakout of those lows, but a demolishing of them. I mean, it blew out this one, blew out that one, big wide price spread, volume expands, almost everything you don't want to see if you're a bull. If you look at that low, the one that it broke today, volume there was heavier than today, so if there's a silver lining, it's that. But we've talked about that before as well, and that is that one, you get a trend transition, whether it's suspect or confirmed. The fact that it can continue once it breaks is the case, right? It just has a lower probability if it's suspect on the break versus if it's confirmed. So in this particular case, what we have at this particular point now is we have breaks of swing points not only on this time frame but potentially on the weekly as well, and that potential looks like it is in fact gonna happen, because that would be one heck of a rally tomorrow to get over that. And you might break two of them as you break here, two of them being you've got a swing point low here at 2045, you're underneath it 2035. Unless they get a decent rally tomorrow, not only are they going to break one, they're going to break two. It's going to go from bullish to bearish all in one fatal swoop. That's always a problem, right? You can get a bounce after it does it, but the fact that it does it is a negative. So your intermediate term time frame is going to go bearish. That's going to join some of those bearish trends that we already had in place on the sectors. We've talked about those before. We've talked about half the sectors were already negative. Now you're getting it here, and unless it does some sort of a miraculous, save, it's going to break on all these time frames. Now the bad thing is not only did it break on the S&Ps, it also broke on the NASDAQ. Broke yesterday here. Today it breaks out the lows. And if you bring it over here to the weekly, it's going after the swing point low as well. That price point's 48.88. You're sitting at 48.77. So it's got the possibility of staying under that. And that would do what? That would do the same thing. And that is that you'd break multiple swing points, multiple time frames, And that, as we've talked about many times before as well, kind of had the range there, will also increase the probabilities of this just continuing down. We had a heads up that this was happening on the Russell, right? Last week, we had the break here, pull back up, right? Then we start to descend this time. We break out this swing point. Well, actually, it's not a swing point, just a low, but we break this swing point on this particular bar. Now we get the extension. And if you look at it on the weekly, we'd already broken, again, the same idea, multiple swing points, multiple time frames. That range was broken to the downside, and now this range is extending to the downside. And we'll come back and talk about the projections here in a little bit. If we look over at the world markets, the damage that we've been talking about just continues. The all ordinaries, if we bring over the daily here, you can see it making a new low last night. India, which has been trying to hold up off of its bounce, begins to trail back off and start heading towards the low. Over in Europe, France breaks a swing point low, continues down. We had the German DAX do the same thing, breaks. I mean, all of these starting to break and starting to break in a big way. Up north, my friends up in Toronto, they break today as well. If you look over at that Hong Kong market that we were looking at, it breaks. I believe it actually stayed under it today, 22,836. Yeah, it did. That also breaks. That will be a weekly break as well if it breaks. The Shanghai, they couldn't hold it up last night. That one actually started back down again. The Nikkei starting to push lower. It's breaking a swing point low today. Everywhere you look, same thing. And that same thing applies if you start looking at sectors. Here's the IBB, right? This has been, you had about 4 or 5 sectors have been holding this market up. Big stocks and big sectors. Heavily weighted stocks, heavily weighted sectors, that's what's been holding the market up. IBB was one piece of that. IBB, we talked about this looking like a head and shoulders, had the right characteristics if you're a classical technician in terms of the volume characteristics, right? Everything was correct on the volume characteristics. When you look at Edwards and McGee's writings, you had the setup just like it was supposed to be. Well, today you break it, right? That's a neckline. And if you do the projections take the head, the top of the head to the neckline and then project it down. This is a big break, and it's in one of the hot sectors, and that's a problem. You look at another hot sector, or one that was at one point, the SOX, right? This SOX breaks down, volume expanding as it blows away the bottoms today. And if you just go down the list, almost all of these, if we go to like the transports, everybody was talking about how the transports were doing something. I told you when it made the bounce, all it did was it changed the equation to a sideways market for now. On the intermediate term time frame, nothing was different. This thing was still wanting to go down. All it was doing a bounce. It didn't even get back up to test a retest regen zone. The industrials, right? Heading towards the lows, going to try to break them out. And what you should notice is that you've got serious damage. Here's the industrials on the weekly. You got serious damage in all these sectors, starting to take place. They're all going after these October lows, highs. If we go to, say, technology and look at it, here's the break going to, well, this one's a long way away, but it's going to break this swing point low. Well, actually, it already broke the swing point low. It's going after the next one now. But they're all working their way back down towards those lows. When I come back, we'll look at the projections and try to decide, does this market bounce or does it not?
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
You know, if you haven't taken a look at the retirement service, which the video there was about, you probably should, especially in a time like this when the market really has a lot of risk. As a matter of fact, you probably should have done it last week when I was, starting to warn you about these things. Everybody looks like a genius when the market goes up because it doesn't matter what you pick hardly. I mean, you got to be a pretty bad stock picker to lose money when the market's going up. It's when it's going down that you make your money. And what I mean by that, you make your outperformance. If you don't lose money on the way down, you're going to way outperform, extremely overperform most everybody. Because most everybody just rides it up and rides it down. And so being able to time those big turns is the key. And you need a process to do that. Of course, we have what we believe to be a pretty good process, a simple model that works most of the time and gives you forewarning that, the risk is high. And that's what you need to know. Is the risk high or not? We talked last night about gold. Gold pops up today, coming up to its swing point low. That's the target. I expect you're probably going to see it try to get up there tomorrow and test into that. That's probably where it's going to find its resistance, settle back down again, right? So you have your ABCD structure now projecting right up into that area that we were talking about, and it'll probably hit into it tomorrow. I wanted to cover that because I touched on it last night, and it was worth following up on it. This morning, I wrote, or actually I did a diary of an exhausted market, and it was a takeoff on what we did yesterday with those overlays. If you haven't looked at this, it's kind of an interesting video. Maybe you might want to take a look at it because I think it kind of portrays what's taking place here and what likely is going to happen over some time. But in the meantime, in terms of what's going to happen now, I'm going to go back to the S&P 500. I'm going to pull it up on the weekly chart. And what I want to point out here is that on this time frame, what you have is a break of this about a 90-point range that's been in effect. That break, now that it's under it, if it holds, right, the projection is to double that. That's the way these projections work. And if you notice, if it does reach those projections, it's going to be breaking 2 more swing point lows down here, or at least testing into them. So you can imagine some sort of a case here where, what you get next is you get a scenario where, let me just grab a different color here. You get a scenario where this thing maybe holds kind of next week. Maybe you get a little bounce back up, right? And then at some point, this thing just starts working its way back down. And then it maybe gets under and back over and holds that area. No, it doesn't end up breaking them, which is probably the worst case if it does it, right? You'd like to see it just come straight down, break them, and then get a decent, move back the other way as a result of exhaustion. But if you come down here and you sit for a while, right, then you can build up the juice and you can just break it out and keep going. Eventually the target's back here, right? It's those October lows, the highs of those lows. That's where the target is. But it's going to take a while to get there if it gets there. The thing you have to realize is that this market, for all the problems it has, it's still a bull market. I mean, that hasn't changed. This thing is still sitting up here at the highs. I mean, this has been going up for 4 years. Now you flattened out. Now you're starting to get a little pullback. The October bar, the top of that bar is 2018. That's on the monthly. If you come in here, 2018 is right here. That would be the first logical place to start thinking you might see some sort of a bounce develop. But a lot of that depends on how the rest of the world reacts. And so far, the rest of the world isn't showing us anything in terms of a bounce. I mean, I saw Taipei a little bit today trying to bounce, but the real question will be is like, does this market come down here and get its little bounce back up and then fell and do an ABCD structure to the downside? That would probably be kind of the worst case. You get a very small pull up, then you get your ABCD structure to the downside. That would finish off, if I draw this in the rest of the way here, let me get a different color. If I draw this in the rest of the way and say, okay, here's the range up here, and if we extend that down and say, okay, where's that right projections down to here, you can see how this kind of an ABCD could get you down into that area and finish off the projection on the way down. But first, there will probably be some sort of a bounce in between. That would be the retest regen zone, right? So in other words, it would come back and it would retest off these lows, and it wouldn't be on the weekly so much as the daily that you'd be looking for that test. And let me grab the daily chart again. That test would look like this, right? So in other words, this is broken. The retest regen is off of this swing point low and this one that starts up. So your area that's of interest is about right there. So in other words, you could get a bounce up to about 2060, 2065, and that's probably about all you could expect. That's kind of the setup, the way it's set up now. Of course, if China starts to fall and really start to cave in, then all bets are off, because really China was the exogenous event that started all of this. That's it for tonight. It's going to be a tough day tomorrow probably. I expect some pressure in the morning. We may get that push down immediately and then a bounce. But again, as I said, a lot of it depends on how Asia trades this evening. Have yourself a great one. Hopefully you're prepared. Prices get cheaper. You can buy stuff back a lot cheaper when everybody else is thinking about throwing it out. Have yourself a great one. Take care. Good night.